The S&P 500 closed up over 1% today. This was actually the fourth out of the last 5 days that it closed higher. This time we closed at an all-time high, and it wasn't alone. We also had all-time highs with the Dow Jones Industrial Average and the Russell 2000. So a wonderful day across the board. We'll take a look at all of that and see if it had any impact on our posture. Then we'll get into our trade application example, where I wanted to once again focus on an energy company that seems to be breaking out of a bull flag pattern. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's Thursday, March 11th. First of all, for those of you that are new, welcome aboard. Remember to go over to YouTube, click subscribe on our YouTube channel, then go down below in our description area and sign up for our email distribution list. Remember, that'll entitle you to not only receiving notifications whenever these videos are posted, but we'll also give you a heads up on any stocks that are giving you overbought or oversold cluster signals in the S&P 500. It just so happened on Tuesday when I did the video last, there were none, but today there's probably going to be some. So be on the lookout for that as well. And then we're also heavy users of Twitter. Make sure you're following me. My handle is @BrandonVanZ. And we really appreciate those of you that click like and retweet on these Market Outlook related tweets. And then last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's activity. And as you can see, I've got chart 6D pulled up here in front of us. I traditionally start with this chart if we have a move of either up or down more than 1%. And today was just barely up over 1%. The S&P 500, to put a bow on it, is up 1.04% to the upside. So just barely, but hey, good enough that we can at least show you this graph here that will give us a sense of when the market is having kind of more exaggerated movements. And we have been in a little bit of a period of that here in the last 2 weeks. You'll notice a few of these larger red candles and a few of these larger green candles along the way. Now, we have to remind ourselves that it was exactly a year ago when we were going through some of the most chaotic markets you will ever experience. All of these lines over here make this information kind of pale in comparison. For example, exactly 1 year ago today, back here on March 11th of 2020, the S&P 500 was down 4.88% that day. If that happened today, there would be panic. And of course, it even got worse than that. A few days later here on March 16th, the S&P 500 was down 12% in one single day. So these were extreme moves, some historically big moves over here. We're about to anniversary those on this particular graph where we use a 1-year daily candle. And so going forward, this middle portion will not look as skewed as it does right now. And it's going to appear to our eye that this type of a time period right here is going to be a little bit more exaggerated than it is right now. Right now, the chart has to kind of account for the crazy movements that we had exactly a year ago. But once we kind of get to the end of March, then this will kind of spread itself out through the chart a little bit more. But anyway, a good day there for the S&P 500. As I mentioned before, we hit all-time highs. So we closed at 3960 there, or at least I should say we closed at 3939. The intraday high was 3960. Both of those, by the way, whether you're looking at closing price or intraday price, both of those would be considered all-time highs for the S&P 500, which of course is the most widely tracked equity benchmark on the planet. So good news for those of you that stuck to your guns along the way. And for our part, I think we've done a reasonably good job with that here in the last few weeks. Remember, it was just, 1 or 2 weeks ago, I made it a point to show you what was trending on Twitter that day, and the hashtag was #StockMarketCrash. And I said, there is not a stock market crash going on right here. Anybody that thinks that there is probably hasn't experienced very many stock market difficulties in the past. And so here we are just a couple weeks later. I think everybody can now recognize that was not a stock market crash a couple of weeks ago, as we are now at all-time highs. Literally anybody who's ever bought a basket of securities that looks like the S&P 500 is making money if they've held them until this moment in time. And along the way, there was only one bearish trade that I took, which was the bear call spread on NASDAQ. So all the additional bullish trades that we've done along the way have benefited us as we now see the market at yet another all-time high. You can see here that the VIX did fall today, but it fell down to 21. That's not particularly low, but obviously quite a bit lower than where we were at when we were at 30 here on February 25th. Let's take a peek at some of the market breadth right now, and let's come on over here to the Visualize tab, and perhaps we'll pull up the indices and take a look at the S&P 500 and look at all that green across the board. There were a couple of notable red ones that stood out. Oracle had a tough day there despite their 33% dividend increase they announced last night. They sold off about 6.5% here today after reporting their earnings. And then GE was in the news this morning, potentially doing a reverse split. Things have gotten so ugly at GE that it kind of needs to artificially pump up its price by doing a reverse split, which is kind of the opposite of what the rest of the market is doing right now. Anyway, GE was down 7.4%. So with the exception of those two, which really stand out there with the dark shade of red, we have tons and tons of green across the board. In fact, I see one that makes me happy right there is Etsy. That's one that we own in my top-down trend trading class for Monday. So happy to see it up about 7% here today. But there were a lot of other notable ones. PayPal did quite well today, up nearly 5%. Tesla was up nearly 5% there today. So some really strong performers. Things are looking pretty good here in the stock market. Let's take a look at our index watch now. And I'm going to pull up the S&P 500 here as well. Hang on just a second. There we go. And you can see it was a bullish breadth day. 300 issues within the S&P 500 were up today, and only 200 were down. So that's a pretty good amount there. Now, it wasn't a clean sweep or anything along those lines, so it can certainly get better. But for the whole, for the most part, we do see more names advancing than not, and that is a good sign for those of you that want to be bullish. And remember, going back to the conversation I had just a moment ago about us nearly anniversarying that chart, remember that's going to happen with the 52-week highs list as well. Here in a few weeks, we're probably going to have a major expansion of 52-week highs because we're kind of getting past some of those levels. And we've already experienced that with some. Remember, some of the stocks topped out earlier and some of them topped out a little bit later depending upon what they were representing. But for the most part, we're going to probably see a larger amount of 52-week highs during this period as we're kind of going through the one-year anniversary of that meltdown that we had last year. All right, let's get into some of the more traditional charts now. Let's go ahead and pop up to chart 4B. There we go. And got some good news here to share. First of all, we do have 52-week highs and actually all-time highs on 3 out of the 4 charts, as I mentioned earlier. So there's the S&P 500. There's the Dow Jones. It was up 0.58% today to yet another all-time high. And then somewhat of a surprise here was the Russell 2000. Boy, what a day for it. It was up 2.31%, and that's actually a pretty solid-looking breakout there. We closed basically at the highs for the Russell 2000, and we cleared cleanly through this prior resistance area that we had back here that was kind of established in the middle of February for about 4 or 5 days there. We kind of topped out right there. So it was great to see us not just approach those levels, but actually just go straight through them. So let me kind of right click and maximize this so you can see it a little bit better. Those are those candles I was referring to over here. A lot of times you kind of go up and you test those levels, and maybe it did that a little bit yesterday, but today it had no business in just simply testing them. It wanted to go straight through them. So that's a promising sign. We had some conversation yesterday in my factor-based swing trading class where the low size factor is one of the critical factors that we study and evaluate. And right now, it's a real head-to-head matchup between low size and value stocks. And value stocks kind of nipped them this week up there at the top of the rankings. But with this type of behavior, 3 days in a row, actually it's 5 straight up days, but these last 3 in particular, since I've done the Factor Selector tool, have been quite impressive. And it is possible that low size gets right back on top fairly soon if they can keep up this behavior. That was an aggressive day there for the smaller stocks. They were up 2.31%. Remember, there's been a lot of activity with GameStop recently. Strangely enough, GameStop has become one of the bigger components within the Russell 2000 just because it's gone up hundreds of percent so far in the first quarter of the year. Anyway, you can see that the laggard as we stand right now is the NASDAQ composite. It was actually the best performer today. It was up 2.52%. And the good news is we now have a bullish posture on the NASDAQ again. Remember, that's what that background color is telling us. It's basically helping us identify if this green market forecast line is considered to be bullish or bearish at any moment in time. So yesterday when it emerged out of that lower reversal zone there above 20, that background color of the chart changed to green with yesterday's candle, and it continued with today's candle going up even further there. So an impressive move for the NASDAQ today, up 2.5%, leading the way there. But the problem is that is the index that from an intermediate perspective has the most challenges right now, right? The other charts you can see have this deeper shade of green that they have right now, telling us that the green lines are at a minimum above the 50th percentile and rising. The NASDAQ is at 34th percentile right now, so it's not up there yet, and therefore that's why it has that light green background color. The other problem with it is what I had mentioned in one of my recent presentations with you. I don't remember if it was Tuesday or if it was last week, but told you to be on the lookout for the possibility of a reversion to the mean type of a move for the NASDAQ and then a potential stalling out at the 30-day moving average, where previously it was using that 30-day moving average as support and bouncing up and off of it. And now with the kind of character change here of the NASDAQ composite spending so much time below that moving average, the fear becomes, is it now going to start using that as a resistance area where it bounces down and away from that moving average? And you can see that it kind of used it as resistance right there, and it used it as resistance on those two candles right there as well. So, who knows, maybe we get a little bit of a pop tomorrow morning, and it's possible it might use that as a resistance area or an excuse to sell off of this kind of quick little pop higher off the bottom, and we might end up resuming our selling in some of those tech stocks as soon as next week. So right now, the bulls are kind of crossing their fingers, hoping that the strength in all of these other three indices will be good enough to pull the NASDAQ up along with the other three. But what we've seen so far is that the NASDAQ seems content kind of going in its own direction. Remember, that was the case for a lot of last year as well. It's just that we didn't really need to kind of worry over it so much because in last year's case, when the NASDAQ composite was kind of dancing to its own tune, it was to the upside. Nobody was complaining about it. Now that it's kind of doing its own thing to the downside, people start getting a little bit nervous about that because, of course, this market is dominated by some of the largest NASDAQ companies out there: Apple, Microsoft, Tesla and Facebook and Alphabet, and those types of companies absolutely dominate the whole S&P 500 right now, and they're also part of the NASDAQ composite. So we're not quite out of the woods yet. Once we start seeing a little bit more bullishness out of the NASDAQ, I think people will feel a little bit better about this market. But in the meantime, some of those old line companies and even the smaller companies out there are still showing you some impressive bullish setup opportunities. Let's go ahead and take a look at our 3 green arrows method now. And for that, we'll go over here to chart 4D. And as you can see, things are growing more promising here as well. 3 out of the 4 charts do have a 3 green arrows set up right now. We've got the S&P 500, we've got the Dow Jones Industrial Average, and the Russell 2000, all with 3 green arrows. Remember, on this chart, 4D, the background color will tell us if we have that 3 green arrows set up. And if it's green, it means that we do. If it's red, it means that there's 3 red arrows. If it's white, it means that there's a mix of green and red arrows. And that is actually where the NASDAQ is at right now. So the other 3 have 3 green arrows. The NASDAQ, again, is the laggard of these 4 at this moment in time. And you can see the background color of its chart is white because it's still below its moving average. right now, it did have enough of an oomph off the bottom there to get a green arrow back on the MACD histogram, and we also got a green arrow there on the stochastic. So we're just kind of waiting to see, can it get through that moving average? And that is, again, the big challenge for the NASDAQ right here. Is it going to use it as resistance and bounce down and away from it, in which case that would be bearish for the overall markets? Or is it going to just be pulled higher by all of these other three indices? And if it can clear through that moving average, you might end up seeing the NASDAQ as soon as tomorrow have 3 green arrows. Now, it's still not going to look as good from a trending perspective as the others because the moving average itself has kind of topped out here. It's no longer going up at the same rate as something like the Russell 2000, but at least it's a promising sign that it's not just going to simply roll over, which there was a lot of fear about that just a week or two ago, right? A lot of people panicking when those high-octane growth stocks were really struggling. All right, let's go ahead and pop over to the internet here briefly. I always like to get an opportunity to say thank you to those of you that help support this project that David and I have here on YouTube. Remember, you can do it in one simple fashion. Simply click like for us on Twitter. It's all we ask out of you. And these videos take us a minimum of 2 hours out of our day. And as busy business owners, you can imagine that we probably have plenty of other things we could be filling that time with. And so to do a free video on YouTube does require some sort of a justification for doing that. And a lot of times our justification is that you guys are helping support it and that you enjoy these videos. So that's how you get your voice heard, is by simply clicking like for us there on Twitter. As long as I'm up and over 100, I'm happy about it. If we're below 100, then I start questioning whether it's the best use of our time. So you guys have done a great job with that. Thank you to the 109 of you that clicked like for me on Tuesday's video. Keep up the wonderful effort there. Also, earlier today I taught my question and answer session. If you're interested in the topics, there was a lot of dividend growth investing topics. Feel free to go up and check out our class offering up here in the trading rooms if you're a premium member of ours. And speaking of which, you premium members out there are in for a treat tomorrow. David's got an action-packed day. Usually Fridays are a little bit lighter for us because I teach 2 classes on Monday, and so usually Friday we only have 1 class, but tomorrow David had to rearrange a few things over his weekend. And so he's gonna be a really busy boy tomorrow with you guys. And so we've got technical analysis at 11 a.m. Eastern Time tomorrow morning. Then he's going to jump into his question and answer session, which he normally has on Saturday, but he's moving it up to Friday because he's got some other obligations this weekend. So he's going to do his question and answer session tomorrow at 1 p.m. Eastern Time. And then, of course, he'll do his Market Outlook live at 3:30 p.m. Eastern Time. So tomorrow is a David Settle day. You're going to have your fill of him. And, of course, there's nobody better in the business to help explain these crazy markets that we're going through. So enjoy that day with him tomorrow. And then I'll be back in the saddle with you guys on Monday for top-down trend trading at 11 a.m. Eastern Time. Also, while we're over here on the internet, a quick glance at what's going on with the factor selector. I kind of addressed this before, but this can kind of help you visually confirm it with your own eyes here. Value is back on top on the factor selector tool that we use for my Wednesday factor-based swing trading class. That class, by the way, is absolutely crushing it here recently. We normally do coin flip trades, in other words, risking as much as we plan on getting rewarded with. And so usually your win-loss rate should be about 50-50 in a situation like that. We've been winning over 75% of our trades since the end of October. So the students in that class have done a fantastic job making the proper setups and things like that. So if you're interested in swing trading, join me Wednesday mornings for that. But what we use in that class to help us determine which types of trades we want to select is this tool called the factor selector here, which helps us gauge where some rotation might be taking place from a factor perspective. And right now, there is something new to address, and that is value stocks are up there at the top of the board. As I explained to those students pretty regularly, value stocks in this current era tend to be oil and gas companies and other financial companies like banks. And naturally, if those areas are doing well, then of course that makes sense that value is now back up on top. And that is kind of the world we're living in right now. Low size did have to get replaced up there, but as I mentioned here a moment ago when we were looking at the Russell 2000, it's not that I think low size is falling off of a cliff. I just think it's a situation where value is going up a little bit more quickly than low size right now. now. So I wouldn't read too much into low size falling. I think it still looks perfectly fine from a technical analysis perspective. It's just that we've got a lot of interest in value stocks all of a sudden, and some of those areas, like those oil and gas companies, boy oh boy, they've had some tremendous percentage returns here so far in 2021. Let's get back on over now to the thinkorswim platform, and let's do some 12 grid analysis, starting with chart 5A. This will be our asset class 12 grid. And as you can see, we do have two pink charts on the board. You've got your TLT on the left-hand side in the middle rung here, and we also have gold on the bottom rung, second from the left. So those are the two areas that are struggling the most right now. They've been in prolonged downtrends for the last several months, as you can see from the charts. Gold has had a little bit of a pop higher here in the last 3 days, but I consider me unimpressed because when you look at all of these oversold cluster signals, you expect that it's kind of like a rubber band that's being stretched far away from this moving average. You figure that the snapback will be pretty aggressive. That is not what we are experiencing here for gold. So whatever's wrong with gold, I don't think it has cured itself yet. This is one where those of you that have taken bearish trades on gold or gold mining securities probably want to stay firm and resolute with that decision. Those of you that are hoping to take a bullish trade on gold eventually, this is not the type of activity you want to see quite yet. Perhaps we'll get to a point where we start seeing some support and some bottoming formations, but right now, this trend is holding. In other words, lower highs and lower lows despite these extreme oversold conditions here. Gold was down again today despite the dollar having a horrible day. Look at the dollar sink right here. That's a pretty ugly chart on the US dollar. Remember, a lot of times when the dollar goes down, it benefits commodities. So even on a day like today, gold simply cannot go up. Crude oil, on the other hand, still rallying. Just like I said, after this 3-day pullback over here, and just like I said on Tuesday, after this 2-day pullback, these are pullbacks you want to buy. These are not the start of some sort of a nasty rollover here. This is an impressive chart right here. This chart continues to go higher and higher, and the crazy part is people don't want to believe it. I mean, if you take a temperature of people in general on social media or wherever you gather together with other traders and investors, people don't like oil, and people don't like oil companies. And I know there's plenty of good reasons for that occasionally, depending upon your mindset of things. But it's worth it for traders to oftentimes put their thoughts aside about a certain industry and just simply look at the technical analysis. And you can't really make the claim that this is an ugly looking chart. This is a chart that continues to rally higher and higher and higher, no matter how oftentimes I bring it up in classes and different things like that. Even my students don't necessarily feel comfortable taking the trades in the oil patch. Yet that's exactly what you should have been doing for weeks, if not months at this point, with a chart that looks like this. Now remember, the oil companies themselves may not always have a chart that reflects perfectly what's going on with the oil prices right here, but more times than not, that is the case. You're not gonna, really see too often where, oil prices are up consistently for 3 months and then oil stocks are down during the exact same time period. They are generally connected to some degree. So there's been plenty of opportunities out there in the oil patch, and I'll introduce you to yet another one later on in the presentation here today. Anyway, let's go through a few more of these charts here. And another one I wanted to point out was Bitcoin. Thing just keeps on roaring. We are at 57,000 on Bitcoin now. And that is, ladies and gentlemen, yet another all-time high. And so here's another asset class that people don't really want to have anything to do with. Now, I will say there are loyal supporters of Bitcoin, the so-called hodlers or holdlers, however you want to pronounce that will just simply never sell their Bitcoin because they've been, brainwashed is probably too strong of a word, but that's kind of how it seems, right? You can never, say anything bad to somebody who loves Bitcoin. Otherwise, they'll grill you on the spot on that, right? But again, going back to just simple technical analysis. This is a chart that starts in the lower left and it's ending in the upper right. Eventually, it's possible this thing will break down. But until it does, you can't predict that ahead of time. It's better to ride the trend. That's exactly what we're seeing right now. even during this time period right here, we had this pullback about 5, 6, 7% or whatever it was. This was not a reason to sell Bitcoin yet. We were still easily above that rising moving average. And those of you that respected that trend should be applauded for that, because today you're staring at yet another all-time high for Bitcoin. You will see that we had some strong price action out of stocks up here at the top. Notice that all three of our stock markets across the globe have a green background color. Emerging markets does have this lighter green background color. And so it's not doing quite as well as the developed foreign stocks or the U.S. stocks. The other thing that is still a bit of a concern to me is the same thing as what I mentioned with the NASDAQ, which is we've got this reversion to the mean move for EEM, and it's approaching that moving average right there. Is it going to be able to blast through it, or is it going to use it as resistance and bounce down and away? So it kind of seems to me right now like the NASDAQ and EEM are almost tied at the hip. They're kind of viewed as more speculative assets. Both on the upside and the downside, you see more volatility there. So it seems like if one is going to go and break through the moving average, you're probably going to see the other one follow suit. So we'll all find that out together. Let's go ahead and take a look now at our sectors. And so from a sector perspective, things look pretty rosy here, right? We've got green across the board. And so we've come a long way, baby, right? There was a while there where it was kind of touch and go with some of these sectors, but right now we are back to bullish postures, at a minimum weekly bullish postures, and that's where we're at with technology, discretionary, healthcare, and utilities. Those are all the weekly bullish postures. That's why their background colors are light green. All the other charts are dark green, telling us that we have strongly bullish postures on those. So our problem children are the ones that are in the light green right now, and similar commentary to what I said about the NASDAQ and the emerging markets. You know, when you're looking at technology here, question is are we going to get through that moving average? Same thing can be said here with discretionary. We're basically sitting right on the moving average at this moment in time. And the same thing can be said with healthcare, and pretty much the same thing there with utilities. So there's still a lot we need to sort out with those kind of four areas of the market right now. But some of these other charts look fantastic. Today's worst performer was actually the financials. It was down 0.29%, but that is a steady Eddy chart to the upside. You probably don't want to step in front of a chart that is that strong. I will say that the chart that impresses me the most right now out of all of these that we see in front of us here on this 12 grid is communications. Really like the way that communications is shaping up, because communications was kind of waffling here for a while, going sideways, and you couldn't quite tell, did it want to kind of did it want to act like technology, right? There's a lot of high tech types of companies like Alphabet / Google and Facebook that are part of the communications group, and so you couldn't necessarily blame them if all of a sudden they wanted to start acting like Apple and Microsoft and Tesla. But they held firm, and we are seeing a really nice bounce up and off of that moving average. Notice it kissed that moving average right there on March 4th and has had a nice bounce up and over it, cleared this prior resistance here, and we closed in the upper half of today's range. So I like the way that communications are setting up there. Should also point out energy. Energy has been a freight train to the upside. Some people might be waiting for a more consistent pullback to kind of reload the gun. But so far, those opportunities have been few and far between. This thing has been aggressive and consistently aggressive to the upside ever since launching off the moving average back here at the beginning of February. In terms of who are the best performing sectors just today alone, that is technology. It was up 2.14%. We also had a strong showing there out of communications, up 1.89%. Let's now get into our trade application example. And as I mentioned to you already, it's going to come from the oil and gas world. And so that will be our energy chart right here to kind of get us into that mindset. Here's what the traditional energy stock looks like at this moment in time. Let me also get out our stock selector tool. Now remember, this is a tool that is available exclusively to those of you that are premium members of Market Scholars, but it's a way for us to kind of have a top-down overlay to a stock ranking system where we can gather a whole bunch of information all in one simple place. So you can see down at the bottom of the tool, there's a stock rank tab, there's a stock rank history tab, there's a 52-week highs tab, a growth stocks tab, a top-down trend trading watch list tab, so that would be specifically for my Monday class, and then a top-down trend trading holdings tab, which would basically detail what all of our current holdings are in that Monday class as well. And the stock that I wanted to focus on for today's trade application example is ranked 14th out of 1,000 stocks. This is FANG, and no, it's not that FANG. FANG, of course, noteworthy in technical and in information technology land because of the acronym that it represents. In this case, we're talking about ticker symbol FANG, which is not a technology company. It's Diamondback Energy. Now, you can see here on this tool that its row is completely highlighted in green all the way across the way there. And what that means is FANG is a stock that is in the top third of all stocks that we track from a performance perspective. It belongs to a sector that's in the top third of all sectors from a performance perspective, which energy is number one right now. And it also belongs to an industry that is in the top third of all industries from a strength perspective right now. And right now, oil, gas, and consumable fuels is number two. Remember, a couple of days ago, I did that other trade with you guys on Core Labs, which was part of the energy equipment and services industry, which was number one. So we did number one industry on Tuesday. We're going to do the number two industry today, which is also in the same sector of energy. You can also see here that there's this F that shows up under this column that says 5 green arrows here. That's what that 5GA stands for. So this would be considered a fresh candidate under the 5 green arrows that I use in my Monday top-down trend trading class. If you see these S's, that stands for stale. So that means that the moves have already been made here a little bit later on, and we might not be timing it as well as we could with a fresh set of arrows, and that's what we stand for right now with Diamondback Energy. You can also see that it hit a 52-week high here in the past week, and so that's generally a sign of strength there as well. So let's go ahead and take a look at the chart now after having acknowledged all of these wonderful attributes of the stock here on the Stock Selector tool. And when I pull up chart 1A, this is the chart I traditionally will use with my Monday top-down trend trading class. Let's give it a second here to get loaded up. And remember, those of you that are premium members have access to all of these charts as well. I'm going to type in ticker symbol FANG, and you can see kind of how that looks right now from a trending perspective. And what caught my eye with this one today is a bit of a bull flag breakout that's taking place here. You'll notice that we kind of formed this flag in the last 3 days, 3 days to the downside right here. And then today we burst up and through that flag pattern right there. And the hope is that we have a continuation move to the upside here. Obviously, this has been a really strong trend ever since the Pfizer vaccine news, right there, the first week of November. This thing went up with a lot of those old line stocks, and it has not looked back. I mean, at that time, it was a stock that was trading, below $30 per share, and it's nearly tripled here, in just the last 5 months or so. And so there's a lot of price momentum behind Diamondback Energy right now, easily outperforming the S&P 500. It's got its WAR score at its highest level. That just stands for weighted aggregate return. So it's one of the ways that we rank these stocks here. You can see that it's got a green arrow down below here on the MACD histogram. We got a green arrow there on the stochastics. We've got a green arrow on the market forecast technical indicator. And you can also see that from a relative strength perspective, Diamondback Energy is one of the elite companies out there. When these lines are all bunched up here near the top, they're at about the 96th percentile right here. It's basically saying that this is one of the strongest stocks against the market, one of the strongest stocks in the energy sector and one of the strongest stocks in the oil, gas, and consumable fuels industry group. So a lot of good things going on here for this particular company from a trending perspective, and that is kind of the trade idea that I did here today. And again, remember, those of you that are premium members that have access to our Telegram trade alerts channel would have been alerted to this about a half an hour before the market closed. This trade was already done. I'm now discussing it here after hours. But anyway, what I chose to do was a slightly different style of a trend trade. In this case, I'm using call options rather than stock as a trend trade. This one had a little bit more liquidity from an options perspective than what I saw with Core Labs on Tuesday. This is a much bigger company here from a market cap perspective, so you get a little bit more activity within the options contracts as well. So basically, I went out to the month of June. I selected the call option that had the delta closest to 70 and purchased it with a 50% stop loss. In other words, if this doesn't work out and this stock starts to fall on me, I'm not risking the entire amount that I spent on the call. On the other hand, if this momentum continues to the upside and we can get this stock above 90, I think it's actually above 91 is my break even on that, then everything else above 91 is going to be gravy with this leverage trade right here. And what we'd be looking for when we're buying a call option like that at a 70 delta is to see if it could get to an 86 delta, and at that time we would evaluate the chart, determine if it's still in an uptrend that we want to be participate in, and if that's the case, then we would roll it to maybe a further out date, or just roll it within the same month to the 70 delta again. But we have to kind of wait and see on that. In the meantime, as long as this momentum can continue to the upside, we now have kind of a horse in the race from the oil, gas, and consumable fuels industry group. Again, if you need the details on the trade prices and the strike prices and all that, just check your Telegram app there for those of you that are premium members of Market Scholars. All right, that's what I had for you here tonight. I hope you enjoyed the analysis. Great times here for those of you that are bulls in the stock market. Boy, oh boy, it doesn't get much better than this. All-time highs on the S&P 500 and some tremendous moves this week after a period of time where some people were getting truly concerned about the market. So just like that, those concerns have been kind of pushed to the wayside, and we're off to the races here again. If you got value out of tonight's presentation of the trade or analysis of the general markets, I ask one simple request out of you. Simply click like for me there on Twitter. There's 4 different ways you can go about that process, and so whatever you choose to do is up to you there, but that will at least send the message that you want us to do these videos on a regular basis. So until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.